This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to this Stock Box interview with Andrew Bell, who joins us from his house. Hello Andrew, how are you?
Hi Mark, how are you?
I'm very well, and you?
It's been pretty good so far.
Yeah?
You've got a car, the lockdown doesn't really affect you.
Right, yeah, okay. So how are you finding the whole sort of lockdown working from home situation?
I've accommodated to it quite well. Some days going to the office.
Okay.
There's not many people about.
No.
But it's getting back to normal. The principal difference is that I'm probably eating more by being at home all day, but I'm definitely eating better by not having the kind of meals one goes out from the office to get.
Okay, well that's good then. Maybe you'll be losing a bit of weight in the lockdown then. It's always a good thing, isn't it?
Far. Yeah.
So we're obviously going to talk today about the two RNSs that RedRock put out yesterday. One on the Jupiter iron ore and the other on your new RedRock Australasia project. So if we start with Jupiter, the company were doing a strategic review of the Central Yilgarn iron ore project, and it's identified an IPO of one of the project's assets to crystallize the value. Can you tell us more?
Well, if you remember back a few years, the iron ore price was up at something like $140 plus or minus. You can never be quite sure what you're talking about with iron ore prices because there are different grades, and a lot of iron ore is sold on contract, not on spot. So there's not an open market. You can't go to the COMEX and say, give me an iron ore price. But people were getting high prices for contract iron ore, and the spot prices were even higher. And then they came right down to something in the 20s, at which price only the top 2 or 3 companies had production that could make money. And even then, not all of their production would make money at those prices. Since then, we sort of come back about halfway up, but and there was a spike last year, but very recently, the price has gone back up to where it was at the peak last year, over $100. And that's because of the interruptions to supply in Brazil, which of course is being affected by lockdowns and things, even though the president is resisting lockdowns of any kind there, and then some particular problems at Vale. So we don't know how long iron ore prices are going to remain high, but what's certain is that in order to get any new sources of supply developed, you actually need these prices to justify the exploration and development. So I have a feeling that iron ore prices could remain reasonable for quite some time. This created an opening, an opportunity for Jupiter to float out its iron ore assets, because you consider the situation of Jupiter. It listed, and when it listed, it said it was going to have a high payout ratio. That means it's going to pay out over 70% of the money it gets from the Shipi mine. In practice, it's paid 90%. Now, what that means is you keep your equity quite low. Your return on equity is very high. The return on equity over the last 4 years of Jupiter is 29.5%, just under 30%. Now, if you're a fund manager, you're looking for these unicorns all the time. You're looking for companies with a return on equity of over 15%. Although, if they have a lot of debt, you may want to use some other measure like return on capital employed. But Jupiter has no debt. But if you can find companies that are regularly, sustainably, over time, producing returns on equity of over 20%, those are unicorns. Those are the things you really want in your portfolio. It's great. So why would Jupiter, having decided this was its strategy, having implemented it, having been so successful, go and put money into the development of the iron ore assets, which in the near term, or any reasonable term, apart from the volatility in the iron ore prices, would have the almost inevitable effect of reducing the return on equity to the shareholders. So what was Jupiter going to do? It was going to maybe invest in expansion of existing manganese assets, where it's in such a strong market-leading position, a market-leading position that it could never achieve in iron ore, and that gives it some pricing power. and it may pick up other assets there, but it wouldn't make sense for it to be devoting a lot of its energies and money to developing the iron ore assets. So these assets were to some extent an orphan inside Jupiter, but the only time you could either sell them or spin them out would be when the price is as it is now and the market's fairly receptive. So we kind of have that a bit in mind. Now, it may be that someone is going to, at Jupiter, come bid for them. It may be that the listing goes ahead. I think the listing may well go ahead. And it's very much in the interests of RedRock, apart, as well as I think Jupiter shareholders, that it should, because we have that still 1.2% royalty interest, gross revenue royalty, on the Mount Ida asset, which is just under 2 billion tons of high-grade magnetite, which beneficiates to about a 68% grade, and is metallurgically quite a good product based on the work that Jupiter did before, and where it would sustain a, say, 10 million ton a year production. So this is quite exciting if it happens. I mean, the danger if Jupiter sold was that the small hematite acid, which is direct shipping ore, could be sold quite easily, and that would kind of leave Mount Ida stranded. Selling the two together or floating the two together is probably optimal from Jupiter's point of view. From RedRock's point of view, looking at the royalty, definitely optimal.
Okay, and the Jupiter board approved to take this further by investigating the IPO more. How quickly do you think they'll move, and what could it mean for RedRock?
Well, we've got, I mean, of course, we've got all the work done. We're used to this. And the team, the chief executive of Jupiter and the chief financial officer, that's Priyank and Melissa, they handled the relisting of Jupiter. We took it off the market for a while as we were starting production, and then we brought it back on the market. They handled the relisting. It was done extremely fast, extremely efficiently, much faster than people expected. And having had that experience, we believe that we would be capable, they in particular, capable of sort of knuckling down and bringing the company to the market. It could be brought to the market with a sort of a dowry from Jupiter, with considerable shareholding still from Jupiter, with support in management terms and so on. Then you bring in people who run it as an iron ore business, who are expert, who know they have the backing of a big, well-funded company making money behind them, and so might have the confidence to go and do deals and develop. But I think it can be done quickly, yes.
Okay, great. Well, if we move on to Australia and to Victoria, now this is a relatively new project and venture for the company, and perhaps for the benefit of viewers, can you first summarise what you've got going on down under?
Yeah, I mean, obviously, in terms of RedRock has always, our sweet spot is gold bull markets. And when there was last one around sort of 2010, our price went up 60 times, and we had sort of various gold assets that were looking quite promising. One of those, subsequently, in Colombia, we sold, and it's gone into the hands of people who are specialists in that kind of mining. Although the real specialist there, unfortunately, got shot in the calf by someone stealing his Rolex in the shopping mall. That delayed things a bit, and then there were delays in equipment going there. So it's taken longer for that to really start firing than we expected. We got paid the loan we made, got paid the deemed loan. We got paid the consideration. We got paid a bit of the royalty, but we still got some money there tied up in expectations of the royalty. And that's not so far operated at the levels we expected, but should pick up this year. So that's a gold interest. In Kenya, we are just on the point of getting our gold licenses back. We've had really an 8-year interruption. Political problems started 8 years ago, and 5 years ago, we had to take the government to court, and it's taken this long to sort out. But that's 1.2 million ounces, and that was just a foundation for what could be several million ounces of prospectivity there, because this is likely to be very similar to the North Mara mine held by Acacia, then Africa Barrick, then Barrick. Same company, changes the name, just to the south. over the border in Tanzania. So that's I think the best mining property in Kenya. We should be getting that back, and clearly that has a lot of value. And when we initially went into that project, we were farming in, but our situation now is we have 100%. So in this period where we had to sort of struggle to assert our rights there, we have been able to consolidate our ownership position. So we have already those gold assets. In 2010 we did very well. We now see a gold market coming again, where the gold price is just nearly touching the all-time highs. I think in 2011 gold went to 1880 close of day, and I think intraday it went up to something like 1911. But we're now over 1800 going up, and I think gold's got the momentum to go through. But remember that the strongest currency in the world the last few years has been the almighty US dollar, with gold being probably the second. So if you look at gold in any currency other than the US dollar, for example, Australian dollar, it's well into all-time high territory already. This is a confirmed bull market in gold. And how long it lasts, well, I don't know, because with bull markets, I suppose they last until everybody who could buy has bought and everybody is optimistic. But not at that stage, anywhere near that stage yet. And gold is always subject to some very strange influences, political, economic, people's feeling about the security of fiat currencies, all kinds of things. But we think that has some way to go. So we recognize this, and you might almost describe RedRock, therefore, as in the last 2 or 3 months, having retransformed itself into a gold company. As Kenya comes back, that's massive, because, we spent a lot of money there, over $10 million in a couple of years at the beginning of the decade. And we got that 1.2 million ounces JORC resource. In 2016, we provided 5.2 million pounds in our balance sheet. And of course, having got everything back and sorted it out, it would be a reasonable expectation that might come back into the balance sheet. So you look at our balance sheet again, you say, well, that looks a bit better. And we've gone into Australia. The Australian gold boom in the 1860s was the biggest gold rush that's been seen apart from the California gold rush. Great fortunes were made, and the amount of money generated from gold at that time built these magnificent cities like Melbourne, but also Britain gained, because a lot of the people who were there were British who went out, and at the time Australia was being ruled from Britain, so some sort of money flowed through to Britain as well. But it had enormous impact and helped build Australia, and then from the early 1900s up to the early 2000s, I would say practically nothing happened there. In the last few years, there's of course been a transformation in attitudes as more geophysical tools like interpretation of seismic, new seismic lines that were run by the state government from 2005, 2006 on, companies coming in and drilling blind targets in the north. And then in particular, of course, the success of Fosterville mine, where Kirkland Lake came in when it had already been operating fairly successfully for a few years in 2016, and they invested a whole lot more money. So now we're down to 1,000, 1,200 meter level, where they're pulling out a lot of gold at 40 to 50 plus ounces per ton. And that is, well, that's an extraordinary, 40 to 50 grams a ton. Ounces a ton is, right? But that's an extraordinary rich gold deposit. And unlike every other deposit in production in Victoria at the moment, it started off as alluvial surface, and they've worked down. Only now have people begun to get the understanding which would enable them to drill from the surface without knowing what's just in the near surface, based on targets deeper down. So you've got a new era of exploration beginning in Victoria. It's been held up this year by, of course, the lockdown and everything, and that's also caused a delay in the government auction of 3 highly prospective tender of 3 highly prospective areas near Fosterville. But in that time, what have we seen? We've seen Fosterville South come to the Canadian market, and it's effectively gone up from the pre-IPO raise 10 times and is now a $300 million company. So since its float in mid-April, it's had an extraordinary run. I say being obviously well promoted and advertised. There's a bit of a bandwagon effect. But other companies from Canada have come in and performed extremely well on the basis of taking small stakes in Victoria. And we had seen where the gold price was going, and we knew what was happening in Kenya and how that was progressing. We could see that would change the image of the company when we decided that it was interesting to build that gold presence and try to play the gold market rise by making RedRock into a gold company, and primarily. And so we went and we started to acquire ground in Victoria. And honestly, we could not have got our timing better. And it wasn't some genius. It's just the luck that sometimes attends these things. We got in at the right time, just as the gold price was about to break out in dollar terms. We got in at the right time in that there was still ground available, and that by doing a lot of diligent research and working with people, we managed to get good ground. And we got in at the right time in that one or two good people suddenly happened to be floating free and available for us to use out there. So we've got, I think, some absolutely first-rate projects, including ones that look like real ringers for the Fosterville mine, geologically, as near as you can get. And there's certainly, we've got geologists at the moment who are sorting through the parts of the land package that we've acquired, and they've got 100 files going on old mines and occurrences within the land we've applied for. And there's another 40 they didn't think it was worth doing. That's being finalized at the moment. We've found some geophysics and some 3D data done by previous workers, assembling all of that. And all those reports are coming through to us in the next few days. And we're going to start supplying, giving it to the market. And we're also progressing very rapidly with the applications that we have made out there sequentially. So we have to look at the possibility of taking those Australian assets and exposing them to the Canadian investor, because that's where you get the best valuation of these things at the moment.
Right. So, yeah, you've mentioned that before about a potential North American listing. Is that still the end goal?
I think that it is. If you were looking at it now and you were saying, what are the different alternatives? You would have to say that the North American Canadian market is probably where you're going to get the best coverage, where the best comparators are, and where the record of those comparators has been strongest, so that investors are predisposed to be interested. And we look and then we say, is this going to be a 5-minute wonder? By the time we get listed, is it going to be all over? And our conclusion is that because there's been so little exploration this year, everybody has budgets. I think I read that that Kirkland Lake at Fosterville, they have an exploration budget of $90 million or something. Fosterville South has $20 million plus in its balance sheet. The way that price is going, they're going to see some warrant conversions, going to bring in some more. And a lot of that's going to get into exploration. And there's so many other companies that have got plans for exploration. But these exploration plans all have to be approved by the same department that has to handle the enormously increased number of applications for new licenses. That has always been an extremely small department in Victoria, and whose work has been disrupted by COVID. So there is, these things aren't going to all happen quickly. But I expect that from the new tender blocks that are probably going to be announced in August, from the Fosterville area, the South Fosterville Company, all the other people who have got interests there and taken interest recently or bought into interests, from the end of this year for the next sort of 18 months, there's going to be an absolute tide of exploration. And some of these people will inevitably have success. And each time they have success, because you're dealing with one of the most fertile gold territories that many places has hardly been explored below the near surface. And when they do have success, everybody will learn something and the geology will become better understood. And therefore, we don't think this isn't suddenly going to go quiet again. It's going to remain a very exciting gold province.
Okay. Now, you announced yesterday that you have a company reviewing the geological data and developing an exploration strategy, as well as preparing an NI 43101. Now, that all sounds very nice, but can you actually do that at such an early stage in the project? And what's the end result of the exploration strategy development? What do you want to have in your hand?
Well, there's so much old data that the team that we've got assembling it all and putting it together. Yes, we've got some places where we have drilled targets straight away, and indeed that's what happened with Fosterville South. They listed, and one of the projects that they got their application accepted for, they'd applied for there. It had been had a couple of holes drilled in 2008, 2009. And they said, right, looking at these holes, the results, nothing's happened for 11 years. Now we've taken over. But we know we can drill immediately in that area, and we know what we're looking for. So we've got situations analogous to that. And the analysis is being carried out by people who know the area very well and have been involved in mining there for many years. So we're going to get that. The 43101, well, that is something required. It's like JORC. It's required for public markets. In particular, in Canada, you have to have it. And the firm that's doing that is well known. They've been very good for a very long time. And it so happens that they have some Victorian exposure and they know it. And they have geologists who can work for them there. Because it'd be no good getting a Canadian business, Canadians, to be producing a 43101 if they can't get in and visit the project. Mm-hmm. And at the moment, Victoria has and New South Wales have troops patrolling their border to prevent people crossing over one state to the other, because they've got very worried about this COVID-19. So Victoria is essentially cut off, and even within Victoria, Melbourne and some of its suburbs are cut off from other parts of the state. So they've tried to restrict all of that. Now, in those circumstances, it could be very difficult doing this 43101 assessment work, but because we've been able to get local people doing it all, we're able to progress this, I think, as with no interruption. The 43101 take not more than if I say a couple of weeks, it's going to turn out to be a bit longer than that. But it's not a massive, huge job. It doesn't require there to be advanced exploration in every area. It's an assessment of what exists and what is there, and putting it in a professional context and reporting it professionally, and stating that there is sufficient exploration potential to justify the expenditure that we are going to project.
Okay, and you expect to have a report in your hand, do you, as the end result?
We'll get a report in our hands, yes. The report is, if you want to list a company in, say, Canada, supposing we're doing that for the sake of argument, we would have a 43101 report, a geological report, and we would have an audit, and we'd have a prospectus that would include some of the salient points of the 43101 report, and we would have a summary of the business. And on the basis of that and the accounts and the statutory information, we would go to the market.
Okay. And the exploration strategy as well?
Yes.
Right. Okay, good. Well, we look forward to seeing how you'll progress that. Just a final thought. There's lots of excitement in this area at the moment, and I believe there are no licenses left, if any. You also announced you picked up another small area that was left. How do you feel about this new venture? Does it excite you quite a lot?
Of course it's exciting, because, if you look at Fosterville South, it'd be easy to say, well, we think our ground is as good as theirs, at least. And therefore, if they're $300 million, we should be $300 million. Of course, that's very easy, but a lot of factors go into making a company being successful in market terms like that. And they've done it. We're not there yet. And anything can happen in this world. So we're very excited because the opportunities are so great. And in particular, remember, Fosterville South hasn't got any resource when it listed, and it's doing the drilling, and we don't know if it's going to have any good find. Well, there's one area where clearly the earlier drilling by the companies produced some high grades. But we think that in the areas we have things that are much higher prospect of coming up with something big. So we're relatively optimistic about that. In fact, very optimistic. So we think we've got the right commodity at the right time, in the right place, and taking it to the right market. And that's extraordinary. As I've been saying to people, this only happens, once in your lifetime, maybe. So Don't waste the opportunity.
And you really feel we're in a gold bull market now?
Well, we are. Yes.
Great. Okay. Well, it's certainly performed well recently, that's for sure. But yeah, thank you very much, Andrew, for that update today.
Not at all. It's my pleasure.
Thank you.
Thanks.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.